Hello everyone, in this video we are going to start with a new concept, financial statement of company. So this chapter is a part of corporate accounting. So here we are going to learn how to prepare financial statement, not complete financial statements, some parts of financial statements we are going to learn. Okay, so before starting with the problems, let us understand the basic concept of financial statement. So financial statements nothing but as a commerce students we all know that P&L account and balance sheet, isn't it? Along with that, there are so many other statements which represent the financial positions of the company. So here the basic introduction is companies are required to prepare their final accounts as per the provisions of Companies Act 2013. They should prepare and keep books of accounts of every financial year at their register office, which gives a true and fair view of statement of affair of a company. So companies should keep the books of accounts on an accurate basis and according to double entry system of accounting. So as we all know the accounting principles, so the company has to maintain books of accounts in the accrual basis. Accrual basis are nothing but the accrual value of the business. We have to, even if you are selling credit sales, if you are making credit sales, means you have to mention the value on the accrual basis. In credit sale, income, that amount not yet been received, isn't it? Even though not received, we are going to mention the amount. This is called accrual basis. Okay, so next, double entry system. Double entry system nothing but there for each transactions will be having a debit as well as credit, that is double entry system. So why we are preparing financial statement? Just we can prepare a we can keep a bookkeeping format only, right? We can mention all the incomes in one side and expenses in one side, right? Why we need to prepare a financial statement? In order to provide a clear picture about the company, in order to identify the accurate net profit of a company, because people are also in public sector, people are also investing in companies, right? If you are running a larger business, means here what we are going to there will be more partners. Some partners will be say sleeping partners, where they will invest only some amount, later they take the profit from the company, isn't it? So in order to maintain transparency, in order to give the true value of the account, the Companies Act keeps on changes the rules in order to standardize the accounting format. Okay, so as per section 129 of Companies Act, at the time of company's annual general meeting, it is mandatory for board of directors to lay down the financial statements before the company. So company is an artificial person, isn't it, as per Companies Act, isn't it? So that artificial person has legal responsibility to represent its books of accounts before the member of the company. A board of members, maybe a directors will be there, chairperson, trustees, investors, and if it is a public company, means shareholders, major shareholders will attend the meeting. So 1 year annual report they have to submit along with balance sheet, so that we can know the business financial position with the help of this financial statement. Got it? So it is mandatory to present the financial statement, right? Nowadays the companies are publishing their financial report, annual report in their website. Why they are issuing in publics? Because in order to gain public interest, right? If you people know the real things, means the public are the major investors of the company somewhat, because we are also investing in share market, right? As a commerce students, we all know something about share market. What do you mean by share market? Think, here the general public is going to invest in equity or debenture or bonds of the public sector banks which are listed in NSE and BSE, isn't it? So if I'm purchasing one Infosys or one TCS share, means equity share, I'm telling, so I'll become a owner of the company, isn't it? So for me, I have all the right to access or all the right to analyze the financial statement. Why I'm going to analyze? Whether I'm going to continue with that or I'm going to withdraw my money back. So every quarterly the company must and should, quarterly means 3 months once, company has to give their quarterly report. Based on that, based on the financial positions of the company, the investor decisions will differ. Okay, so this is the basic concept why we need to prepare in a financial statement. So financial statement, very important concept. If you learn to prepare a financial statement accurately, means somewhat we justified for studying commerce. Exactly right. So if we don't know anything about financial statement, means, sorry to say this, we failed in this. Even though we have cleared all the papers, but somewhere we missed the concept. Entire things will get flopped. So it is very important for your who is going to continue in accounts field. For them, this financial statement is very much important. Okay, next, so here financial statement inkuta, as I told, financial statement means not only the P&L account and balance sheet, it also includes cash flow statement, statement of changes in equity, notes to accounts. See, here in profit and loss account, now we are going to call it as income statement. Okay, next, balance sheet will be considered as financial statement, or you can write it as balance sheet. So cash flow statement. So cash flow statement are nothing but a statement which represent the company's cash inflow and outflow. Okay, what are the incomes the company is going to receive, or liability that is being received, or expenses paid, or any purchases had made. So these things will be stated in cash flow statement. So here this cash flow statement tells about the liquidity position of the company. Liquidity position means how a asset or a share can be easily converted into cash form, isn't it? For day-to-day transaction or day-to-day company events, we need certain lump sum amount in cash form, isn't it? So the liquidity position is very much important for the companies. We also call this as a working capital. Okay, so next, statement of changes in equity. In this statement, they are going to mention increase and decrease in the equity shareholders. Majorly this part will comes for the only public sector banks, that too which is listed in stock market. Okay, so which are listed by SEBI in stock market, those companies will show these changes. Next, notes to accounts. These points will represent after the balance sheet. After balance sheet, after the financial year, we know financial year starts from April to 31st March with respect of your year, isn't it? So during particular exactly after the close of books of account, few things might be received or paid. For example, we are going to call those things as a contingent liability or contingent asset. Income we are going to consider as contingent asset, expenses as contingent liability over here. So those things will be, we are going to write it in the note after balance sheet. After preparing a balance sheet, so we are going to mention note about these contingent liability which are being receivable or which is received after the year ended or at the time of for example, if all the auditing work has been done on a particular day, on that day exactly if any amount is being received, so those expenses will be noted in note. Okay, so here there are few points which is related to companies accounts, which gives us some idea about final accounts. So we are going to prepare income and financial statement as per Schedule 3 of Companies Act. Okay, while writing exam, better you people mention this as your heading, then start with working note, then start P&L account, that is income statement, then balance sheet. Okay, these companies must prepare and present their final account as per Schedule 3 of Companies Act. That schedule was formulated in order to keep pace with changes of economic philosophies leading to privatization, globalization, and subsequent desired changes in corporate financial accounting. So the schedule format is being included in order to change our books of account in a dynamic form, which helps us to include all the things whichever possible in manner. So if you I'll show you the format of the income statement and balance sheet, then you'll get to know the thing about this point. See, almost all possible payable, receivable, paid, received, 99% concept of whole accounting which you learn from PUC till date, all those things are included in P&L and income statement. So in such a dynamic way, this format is being formulated. Okay, see here they have added few new features to the Schedule 3. Vertical format, so we were preparing horizontal, right? So here we are going to prepare liabilities, asset, then we are going to tally the liabilities and asset. But now we are going to solve in vertical manner. So here liabilities, then assets will be there. Like this we are going to classify. So and presenting balance sheet in items, their classification into current and non-current assets. Non-current assets means long term. Current liabilities means short term liabilities. Okay, you should know all these things, right? So next, vertical format of P&L account. In the same way, vertical format means one side revenue, then all the expenses will be identified. Next, elimination of concept of schedules and such information is now furnished in notes to accounts. So there are so many see notes to account here. For this vertical format, one more new concept is being included. Before schedule 2 also it was there. We are going to call them as a schedule numbers. Now we are going to call it as note numbers. For each major assets and for major liabilities, we are going to mention note number 1, 2, 3. So why we are preparing these notes means in order to avoid the confusions, as earlier I told. So these things are formulated in such a way in order to avoid the complexion of preparing company's account. It is very simple. Here there is no chance for missing out the things. Okay, so I'll teach you about these schedule numbers now, or note numbers. It does not contain any specific disclosure for item included in schedule 4 under head miscellaneous expenditures. Debit balance of P&L account statement will be disclosed as negative figures under reserves and surplus head. So debit side balance of a P&L account, debit side balance here means if there is any loss means that will be shown in a negative figure. So negative means loss, isn't it? So we can minus it. Preparation of cash flow statement as per accounting standards 3. As I told you, as per AS3 there are two methods. One is direct method, another one is indirect method. So these cash flow statements is not covered under corporate accounting. You people will definitely learn this in management accounting after going to your higher studies. Okay, not in higher studies, next year exactly. If you are in a final year, definitely you will learn about cash flow statement. Very easy concept. That is also very simple. Next, schedule give prominence to AS accounting standards in case of any conflict between AS and schedules. So it is a very clear cut. It follows the accounting standards rules. Okay, so I'll quickly move on to, just wait. Okay, so this is a profit and loss account. Okay, just income statement or profit and loss account. So we'll be having only this much particular note number and amount. Okay, I'll move on to next one. This is the format. Yes. So this is the format for P&L account. As particular represent the what are the items which are we are going to write it here. So we are going to start with revenue from operation. Revenue from operation, nothing but net sales. What do you mean by net sales, guys? Total sales minus sales written if they have given means. Okay, other income, I hope you all understood this. Revenue from operation means net sales. You should not forget that, net sales. If in question they have given total sales means you have to minus sales written from that. Okay, next other income. Other income, nothing but any income that is being received. For example, salary received, discount received. Okay, like this, any income is received except sales, that we are going to consider as other income. Okay, if you add these two we are going to get total. Okay, so these note numbers I'll explain you. Note numbers nothing but just we are going to give one number. For example, material 1, finance cost 2. Like this we are going to represent certain numbers. While explaining, after explaining balance sheet, I will put note numbers in order manner. Okay, once again I'll explain you the other things. Okay, so this is the thing where I recognized my total revenue. Next, fourth point, expenses. If you there is no necessary to mention this. If you mention it means the valuator will easily identify the things which 1 and 2 added you received third one. Like that they will get to know the things, or else you can point it in ABC or 1 2 3, anyhow you can represent. Okay, so next, expenses. So in expenses we have certain things. Cost of materials consumed. Yes, so this is exactly information related to raw materials. Okay, any raw materials received information they have given means you have to write it here. Next, purchases of stock in trade. Okay, raw materials or any purchases made we are going to mention here. Any changes in inventory. So changes in inventory nothing but opening stock minus closing stock. Okay, so if you are going to identify opening and closing stock, if it is in positive value means write it in positive. If it is in negative means just mention a negative value. Negative means you have to minus it while adding it. You know that, right? So employee benefit expenses. This expenses full and full related to employees. For example, salary paid, bonus, commission paid to employees. Okay, the things which are entirely related to employees. PF amount paid to employees. Anything which is paid, mark that word, paid to employees, no, that is will be considered in employee benefit expenses. Next, finance cost. These are the things which is related to interest received, or debenture interest, anything, bond interest, 12% of bond, 13% debenture interest. So those kind of interest related things will be in finance cost. Next, as usual, you people know depreciation and amortization. Depreciation for the fixed asset, amortization for the intangible assets. Okay, next, other expenses. In above expenses which are not included, those will be in the other expenses. For example, commission paid to any vendor or kind of something, or bad debts. Okay, then administration expenses. The expenses which are not included in these above three, no, those will be identified in other expenses. Okay, got it? So this is about income. So by adding all the above 6 points, we are going to identify the total expenses. Consider this one as A and this one as B. So profit before exceptional, extraordinary. So actually this is the format. This is how the problem has to be solved. But for your examination purpose, we are not going to mention any of this. For example, this one will not be mentioned. Okay, and here these 4 points will not be covered for you people, because you people are learning for UG level, isn't it? So these things will be there for the CA inter who is doing CA internal. For them, they will be having these things. So A and B are the things. Profit before tax will be A minus B. Total income minus expenses. Next, less tax, you will be getting the net profit. Okay, this is how we will be solving, but it will not be easy as you people think, because this from this chapter, that is section C. Okay, wait, section C question, that is 12 marks or 15 marks problems will be asked now. So you people have to prepare P&L account along with balance sheet. So the thing is, you people will be having additional information, that is where we do mistakes. So for example, there will be 5 additional information. Out of that, 3 will be easier but 2 will be confusing. So with this help, definitely we can solve the problem. It makes the solution difficult, but once you understood the things, no, then it will be easy. Every time you remember that the whatever the information that they have given in additional information, no, that will have double entry. So 2 entries will be there, either in income statement and also in balance sheet. Like that, there will be 2 things, like 2 entries will be there for additional information. Okay, next, balance sheet part. So quickly we'll see the balance sheet. Yes, equities and liabilities. First, always we are going to start with liabilities. Okay, tell me why we have to start with liability. Why can't we start with assets? What you people think? What is the reason for starting with liability? Okay, try to answer this question, guys. Why a balance sheet is always starting with liability, not with asset? Okay, so if possible, you people comment in the comment section. I'll read and how much you people know about this concept. Let me see. After few videos, I'll answer this question. Okay, so now I want. Okay, so in equities and liabilities, first one is shareholders fund. In shareholders fund, majority the point which I'm taking, no, that will be there for you guys. Other things are in the format only, but you have to learn that. If you write full format, then only you are going to score full marks, or else definitely you people lose it, or lose few marks. So in shareholders fund, share capital, reserves and surplus. Share capital, here we are going to mention about equity share capital. In case if they have given any preference share, means that also we are going to represent. Okay, next, reserves and surplus. Here all reserves like capital reserve, general reserve, capital redemption reserve. Okay, there are so many types of reserves, no? All those reserves and surpluses means previous year net profit or amount transferred to P&L account. What are the things are there, no? Those items will be mentioned over here. Next, share money received against share warrants. These points will not be there for you guys. Only the points which I have marked as tick, no, that one is very important for you. Okay, share application money pending for allotment. This is also we are not going to learn in this level. Next, non-current liabilities. Non-current liabilities means nothing but long-term borrowings. And deferred tax liabilities, sometimes they might give, sometimes they may not. Okay, other long-term liabilities and long-term provisions. Okay, next, current liabilities, very much important. Current liabilities mean short-term borrowings. Trade payable, trade payables, nothing but sundry creditors informations. Okay, other current liabilities and short-term provisions. Okay, so if you total it, this total is considered as total liabilities. Okay, next, this total has to be equal of assets, right? So in assets, non-current assets is important. In non-current asset, we are going to deal with fixed asset, that is tangible and intangible asset. Tangible assets, nothing but which we can see, we can touch, and we can, for example, fixed assets, what we are going to call machinery, furniture, land and building, plant and machinery. Okay, so intangible assets, nothing but goodwill. We are going to, intangible means, for our mind always we think about intangible mean goodwill. Other than that, trademarks are there, copyrights are there, intellectual property rights are there. Okay, patent are there, right? So brand, though there are so many things. Okay, so intangible assets. Okay, next, non-current investment. Here they directly give the investment made for 5 years, 3 years, like that they will mention, or they'll give us investment. So write it under this head. Next, current asset, current investment. Inventories, inventories means stock. In this we are going to write the closing stock value. Okay, trade receivables means debtors. Cash and cash equivalent means cash value and bank value, bank balance, both we are going to mention it. Next, short term loans and advances and other. So this is the total B. So finally our total A and total B should match. If it is matched, your problem is correct. If it is not matched, somewhere in some adjustment or some in note numbers, you have done a mistake. Okay, next, I told you, no, we'll talk about note numbers. Okay, so these note numbers represent the working note of balance sheet and P&L accounts items. For example, so note number is, we are going to, how we were preparing, if there is any calculations means, after drawing the lines for balance sheet, or before that we'll leave one page and we'll write 0.1 calculation of depreciation. We'll calculate there, and that answers will be written in the balance sheet or in the P&L account, isn't it? But the Companies Act made it mandatory for us to mention each working note in an orderly manner. So how we are going to start? So for us, income statement is the first point, right? We are going to start with income statement, but here we are going to start the note number 1 from balance sheet. Okay, so first one will be always share capital. So yes, here it is. I'll change the color now so that is very easy and vibrant to understand. So this is the note number column, right? So always note 1 represent share capital. Okay, so if there is any calculation or if there is no calculation also, you just write note 1 5 lakh rupees equity shares hyphen 5 lakh. That mandatorily you have to write. For example, yes, this is the format. I'm just saying, for example, I'm while examination I have drawn my rough or empty format for the balance sheet. I have mentioned all the things. Okay, I have written all the things I have written for calculation purpose. Now I'm going to start with note 1. Okay, so note 1, what they have given, always note 1 is for, I'll just note numbers I'll write here. This is my note numbers. So note 1 share capital. Okay, if you have time for this also, you have to write particular amount. Okay, so in this way we have to write particular amount. Okay, for each, so around 1 to 14 notes are there. So first note is always share capital. So equity share capital amount 5 lakh. Total 5 lakh. So this total will be written here as 5 lakh. Getting my point? For like this, for major concept which requires working note, no, that will be covered in note numbers. So share capital we are having. Next, for reserves and surplus, note 2. Okay, next, not no, for this one and for these things there is no note number, because this will not happen always. So directly we are going to move on to long term liabilities. This is note 3. You are getting my point, right? So under equities and liabilities, note will be done. For note means nothing but working note. Don't crack your heads for these things. Note means nothing but working note. Separately, compulsorily we have to do it. Okay, so note 3 for long term borrowings. Next, note 4 for short term borrowings. Okay, for these things and all there is no note calculation at all. Okay, so next, note 4 for short term borrowings. Next, note 5 for other current liabilities. Next, note 6 for trade payables. You can write it in order way, or you can roll reverse it. Okay, no issues. Okay, next, note 7 including both tangible and intangible, we are going to write it in fixed asset only. Not we are going to separately mention, calculate it directly for fixed asset. We are going to mention the note number. Okay, and there is nothing doing with these things. We are going to move on to like at investments. No need of working note. Next, inventories 8, trade receivables 9, cash and cash equivalent 10. Okay, so see guys, the note numbers is not like fixed. You can change. For example, here there is no calculation in other current liabilities. For example, in your question there is no other current liabilities. Just for example I am saying. Okay, instead of mentioning 5, we can ignore this. You're getting my point? Instead of writing this, we can write note number 5 for trade payables. So whatever you have written note number, for that one we are going to calculate over there, right? So like that, if no information given for particular thing means, so we can skip, but entire concept you can skip it. Okay, so one or two things might be changing. So the concept is here, in order to regularize the calculation format, they have given note numbers. These note numbers, only one thing is, it should start with liabilities, that is share capital. Okay, and with balance sheet you have to move to P&L account. But one sad thing is here, firstly we are going to prepare P&L, then only we are going to prepare balance sheet, right? For this particular thing, you people might be getting been confused. So while solving, I'll explain more detailedly how you have to fix the concept over there. Okay, so note number till 10 we have note numbers. Here also no note numbers required. Okay, next, income statement, right? For income statement, okay, for income statement, as I have mentioned early, so no need of like how many notes we have written here, 10 notes we have mentioned, right? So here for this income statement, for revenue from operation not required, other incomes not required. If you want to add means, you can give us 11. If you don't want, you can write it directly, means majority of time there will be no other income in your question, most of the time. Okay, so for that particular purpose we don't need to write the note number for this one. And revenue from operation, they will give the sales value directly. 70 to 80% of time they will give directly. Sometimes they'll mention like this. Okay, so no need note numbers for this revenue part. In expenses, this is related to purchase, right? Directly we can mention. Change in inventory, I have told you, right? Opening stock minus closing stock. So if it is in positive value or negative value, we are directly going to write. So no need of working note. Employee expenses, we require note number. So 10 in balance sheet, we are going to represent 10 notes. Okay, so after 10, 11 for employee benefit expenses, 12 for finance cost, and 13 for depreciation and other expenses, 14. I have told you, right? Only 14, just mentioning the note numbers. Okay, in which item you are having more workings, no, for that particular thing we are going to mention. and for that note numbers separate after the format of your income statement and balance sheet. We'll mention note number here above the for particular. Here we'll mention like note 13 depreciation and amortization, here particulars amount. So we'll calculate the whole part here, and total of this we are going to write it directly here. Okay, like this we'll solve this. So easy, literally it is very easy. Hope you understood the concept, I think so. Okay, if you have any doubts, please comment in the comment section. I have asked you people one question: why we are starting with liabilities in balance sheet? Okay, in vertical format, right? Why can't we write assets? Why we need to mention the liabilities first? Let me know the answers. So okay, hope you all understood. Thank you for watching.